Hey, good evening, Natan. How are you?
I'm good. I'm good. How are you?
I'm good as expected to be. Um, okay, for the sake of people who have tuned in on time, I suggest we just start straight away.
Let's go for it.
Okay. So, hi everybody. My name is Mirit Hoffman. I'm an elder law lawyer and a gerontologist, and my office focuses mainly on senior citizens staying in control when they reach significant junctions in their lives. We're talking about preparing wills and enduring power of attorneys and prenups or postnups for second marriages. And I also can advise regarding estate planning for people who have US and Israeli citizenships. And from my broad exposure with this age group, I realized that there are a lot of other significant issues, not just legal, that need to be addressed. And therefore, for over 2 years, I'm hosting these talk sessions called Golden Topics, where I discuss other issues with professionals who work with or deal with issues to do with the elderly. And today we're going to be talking about mortgages for ages 50 and up with our specialist on this issue, Natan Nagar. So thank you so much for joining us. And why don't you introduce yourself, please?
Sure. Thanks for having me on. It's really a pleasure. My name is Natan Nagar. I do mortgages. Originally, you can probably tell from my accent, I'm from Chicago. Now I live in Israel, specifically located in Haifa. And myself and my two partners, we do mortgages all over Israel, and probably every single variety that there is. One of the things that the Israeli market slowly started awakening to over the past, 2, maybe 3 years, is that a lot of people need solutions for different stages in their lives. And that's really why I really want to go through a lot of not just the challenges, but also the solutions to mortgages for people who are 50 plus.
Okay.
Um, yeah.
So let's just start with the basics. Let's just start with what is so special about age 50 and up that we have to have mortgages become suddenly like an issue. So why don't you walk us through that first?
Okay, so that's a great question. I'm going to actually take a step back and explain from a very fundamental level what a bank goes through when they give out just a regular mortgage, and from there we can really inform ourselves of what's special about this age group. Normally, when a bank gives out a mortgage, they don't know who they're giving the mortgage to, and so the easiest way to think about it is let's just pretend that you have to get that you're the bank and you have to give out that mortgage. You're going to be shelling out upwards of $1 million, shekels, whatever it is. What you really want to do is you want to make sure that you're protected. So the bank has a few lines of defense here. Number one, first and foremost, they want to know that if something happens, they didn't just lose out on the money that they gave as a loan. And so they're going to ask for some sort of collateral to back up the loan. And that's essentially the idea of mortgaging the home as long as the value of the home is larger than the value of the mortgage, then the home is going to be able to cover the loss if that potentially does happen. But that's just the first line of defense, right? The bank's not in the real estate business in the sense that if something does happen, they don't want to always be selling off homes in order to cover mortgages. They're in the business of money, they're a bank. And so another thing that they're going to do, another line of defense, would be to check the income, the total income, the total expenses of somebody who's asking for a mortgage. And what that helps them understand is can they successfully shoulder the mortgage throughout the years, right? So if somebody's making, let's say, 10,000 a month and they have mortgage payments that are 10,000, they're not going to be successful at paying back the mortgage because life has other expenses in addition to just your mortgage. And so they look for really that percentage where statistically they know, and this is really key. Banks aren't personally judging you. They're looking to fit you into some sort of group where they statistically know that if they give the money, they're protected. So another thing that they look at is really income. And probably the last thing that they do, their last line of defense, broadly speaking, would be life insurance. Where you got life insurance, where if chas v'shalom something does happen, and one of the spouse ends up passing away, then the life insurance is able to fully cover the mortgage, and that way you don't have to get into any complicated situations. So if we look at those three, once you get to 50 plus, you actually do start running into some interesting challenges. Your income's probably going to go down when you retire. So be it 67 or some other age near there. And another thing is that you're going to have a little bit more trouble getting life insurance. What the bank does is they actually limit the duration of your mortgage. Some banks do until 80, some until 82, some until 85. So let's just take a classic example of somebody who's 60 years old. They're going to have less time to spread out their mortgage. And what's going to happen is their monthly payments are going to end up being higher because if they have less time to pay off the same amount of money, something's got to give, right? And so that's going to kind of condense. The monthly payments are going to be higher. And sometimes it's the monthly payments that cause trouble. But either way, people generally find that they run into some sort of challenge, and there are solutions for those.
Okay. So let's go now to a next step and say, so what are the needs of and concerns of taking a mortgage as you grow older? Why don't you elaborate about that?
Okay, so oftentimes people, and I really learned this, through my clients. Oftentimes people go through their different stages of life, and are used to what they've been doing for the past couple of years, and then find themselves almost a bit surprised that what they're looking for, what they're looking to get out of deals, investments, all of those types of things isn't quite as relevant, right? So if you're spending your 20s, 30s, 40s, 50s, 60s trying to make money, grow money, save money, once you reach a certain point, you're really looking to not just grow your money, but really safeguard your money. You're looking to make different types of lifestyle moves and changes. So a lot of things that, and this is just one example of many that many people don't think about, is if you're comfortable renting from your 20s, 30s, 40s, etc., once you get to a certain point, you can have the best landlord in the world, but you don't want to find yourself in an unfortunate situation where you're 80 something years old and you need to be moving because the house isn't yours and because the owner sold, or for whatever the reason is. You want to sometimes go through with purchasing a home just for the sake of having the stability of the home being yours. And really changing and shifting your mindset to what now is important to you as opposed to what was important to you is a really great way of approaching it, because a mortgage doesn't last, for the next 5 years. It can go on for 10, 20, even 30 years, and even at this stage in life.
True, true. Okay. So what are the different mortgages that we can, what are our options? And I'd like you to also really discuss the whole reverse mortgage that we had discussed previously, because I think that would be very important for people here.
Okay, fine. So there are a few different options. I'm going to run through them somewhat quickly, and then I'll delve a little bit more deeply into them.
Okay, good.
Best case scenario, get a regular mortgage. That comes with its challenges. Sometimes you're going to have to shorten the duration. Okay. And that means that your monthly payments are going to be higher. But if you're able to do that, very often we can find, for example, when it comes to life insurance, which generally comes with the mortgage, we can find some sort of an exemption to help make monthly payments easier for the total package. That would be the best case scenario. Barring that, because let's say you have, sometimes like I'll have clients who are 68 and 70 years old. We managed to get a regular 12-year mortgage for them at a bank that was okay with their bottom line. They were comfortable making those monthly payments, and they got a great mortgage. They were able to purchase a home. They made Aliyah, and they're actually going to be arriving sometime next month in the middle of this entire war situation, which hats off to them. If you're not able to do that, then sometimes your next best option would be to include your kids, right? Because in the specific situation where you're limited, not necessarily by your income, not necessarily because you're going to retire, but just because the banks are only used to giving out mortgages, until 80, 82, 85 years old, sometimes 90, it may be actually better to include your children, right? And that would help average out or lower the age of the participants taking the mortgage. That would be another solution. A third solution would be a reverse mortgage. And in order to understand a reverse mortgage, you really have to flip it. Normally, pun not intended, normally, when you think of getting a mortgage, right, the bank's going to look at not just the value of the home, but they're really going to look to see if your income is able to support it. When you're getting a reverse mortgage, you're able to get a mortgage without any relation or checks at all whatsoever into your income. How does that work, and how does the bank still stay protected? Because they assume worst case scenario and then work from there. They assume you're not able to pay back the mortgage, and you have the option of paying it down. So you're able to, but you're not obligated to do so. In the worst case scenario, if something chas v'shalom happens, you make the purchase, you get your funding through the mortgage, and if the time comes, then your bank and or insurance company, they also give out reverse mortgages, are going to turn to your kids and they're going to say, okay, you guys have a year to sort things out. If you want to pay off the mortgage, that option exists. If you want us to sell the home like we originally planned and use that to cover the mortgage and give you whatever remains, that's also an option.
Hang on,
Once you
hang on. Let's just back up a bit because I'm not sure people understand. A regular mortgage usually is when people want to purchase a house, they get the fair market value of the house. That's how the mortgage is decided. Let's say it's 70% of the value of the house. And then, the bank has the house as a collateral. With the reverse mortgage, the bank has the house as a collateral, but it's reversed because you already own a house. What you're basically doing is you're putting your house as the existing house that you already have that you had purchased as collateral. And the reason being, and correct me if I'm wrong, is because you might have this asset, but you don't have the day-to-day money to live, meaning you need that money, or maybe you want that mortgage because you want to take that trip around the world with your kids just before, you cannot do so anymore because you're getting older, whatever reason it is. You want that money. You don't have that cash in hand. You have the asset, but you don't have the cash for your everyday life.
so that's one way of looking at it, and it also does cover some bases. But the more base way of looking at it is the bank's protected not because of a combination of collateralizing the home and checking the income, but the bank's protected because they'll give you less of a mortgage. So if a normal mortgage can be up to 75% for your first home, here the banks are willing to give you, depending on your age, and actually the more advanced you are, then the more they're willing to give you. Okay. They can give you anywhere from 1/3 to around 1/2 of the value of the home. So the safeguard here is that if home prices fall in the future, if you're not able to pay anything down and the interest payments accrue and add on to your original mortgage, they're still going to be covered. Let's say it jumps from 45% all the way up to 65%. That's still a safe enough percent for them to feel comfortable giving the reverse mortgage. What you are definitely right about is the applications and the use of a reverse mortgage are pretty varied. You can take it to purchase a home. You can take it and use it in what's known as a pensioner's mortgage, for example, with banks, as a sort of credit card, where you're basically securing a larger line of credit that you're able to pull from each month. You can pull the full amount. You can cap it. There are more detailed arrangements, but absolutely, you're able to mortgage your home. You're going to get less of a mortgage. The amount's going to be smaller because the percentage is going to be smaller, but you don't have to check income unless you're going through a bank. And even with banks, the income that you have to check is a much lower bar that you have to pass.
Right. And at the end of the day, what happens is when you pass away, I'm assuming that's the end of the day, or at the end of this, let's say 10-year period that you asked for the mortgage, if you cannot pay it, then the bank will take that percentage from the house, right? It means you'll have to sell the house and pay up that mortgage with the interest, with whatever.
Right. So here I'm going to split reverse mortgages into two categories. One is a pure reverse mortgage with insurance companies, and the other is a pensioner's mortgage with Israeli banks. So far, there are two Israeli banks, I'll say 2.5 Israeli banks doing pensioners' mortgages. A bank is still obligated by banking regulation. So that means that they still have to do some sort of an income check, but they don't mind you passing with flying colors by lowering the bar to what's known as a grace loan, where you only have to make enough money in order to pay for the interest payments as opposed to both interest and principal, right? So they're also willing to do a full grace, which is you don't have to pay interest or principal, but on the back end, there are some calculations to be done, which I don't think we'll have time for in the scope of this. A pure reverse mortgage has an indefinite time period. If you end up living until Me'av Esrim, until 120 years old, then nobody's going to come, nobody's going to take your home, nobody's going to, kick you out, chas v'shalom. Um, and and then at the end of the day, after everything's said and done, the choice is left to your children.
Okay. And apart from reverse mortgage, you said there are other options of mortgages. Do you want to elaborate on those?
Yeah. So, and I'm going to maybe preface this with, especially if you're an Anglo, income from the States, from Canada, from the UK, that counts. Okay. So the bank's able to look at that and they feel comfortable if you're coming from an Anglo country, parts of Europe as well, but Anglos definitely, fair or not, do have it a little bit better here. And they're able to look at that income and they're able to count it. One of the nice aspects of that is that you're able to actually get a business mortgage. So I'm going to give you a quick example of somebody. He is from the UK and he wants to purchase here in Israel because he's not an Israeli citizen and he's a little bit too advanced in age. Because he's not an Israeli citizen, he's not able to get the 70%. Because of his age, he has a bit of trouble also. And so because we can structure it as a business loan, as long as the business is able to make that purchase and it makes sense from a business perspective, he's still able to go through and make that purchase, not as a regular mortgage, but as a business mortgage. And especially if you have something like an LLC, something where it's a separate legal entity that's able to make the purchase, that's not necessarily quite in the same way tied down to an individual as a normal mortgage would be. That's definitely getting into the weeds. So the only asterisk that I'll mention there is it has to make sense from a business perspective, right? The bank's not just going to hand out money. They know what they're doing and they're going to check properly. As long as we come prepared, that's also fine.
Okay. So that was a business mortgage. Are there any other mortgages or options that are available for people?
No, that's really just about it. Bank Mizrahi Tfachot, which I would also like to commend on being the first bank to come out with pensioners mortgages, also has an option known as Hipuch Lovim, where you basically flip. You're able to have parents purchase and children make the mortgage payments. The opposite is also true. You can have children purchase and parents make the mortgage payments. And that very often can be a solution if you're trying to get a regular mortgage but for whatever reason, because of the aforementioned challenges, or for a different challenge, you're not able to do so with a regular mortgage. You can still slide in there and get a regular mortgage, but do it through Bank Mizrach Tzfachot, which does hipuch lovim, flipping the roles.
That's actually interesting. I was thinking about maybe when people get married and they want to gift a child a home, but they don't have the actual money for that. This is a way that they can help out their kids by paying their mortgage.
Absolutely, absolutely, and that also joins in with a whole slew of creative solutions, not least of which is guarantors, and including that as well. But yeah, what what I would maybe say, bottom line, and probably most importantly, is that there are so many solutions. You may not be able to get exactly what you want. I'm not here to make promises that don't exist, but very often, much more often than not, from my experience, people assume that they're not able to get the financing, not able to get the funding, not able to get that mortgage because they heard. And what friends say may be true partially, may not even be true at all. Best thing to do is just to ask. We're going to leave, I think, my contact information up.
Yeah.
Feel free to, pick up the phone, ask the questions. I'm going to give you the time of day, and we're going to think through it. If it makes sense, then it makes sense. And there's really no reason to tell yourself no, it's not possible. If you're able to really verify if that's really truly 100% true in your case.
Okay. So actually that's interesting because I didn't even think about it, but there's a lot of reasons really to take out mortgage. It's not just about living it up as we get older, or just being able to live full stop because you don't have the cash in hand, but it's also a way to be able to help our children purchase a house when we don't have enough of the base to give to them. This way they can basically purchase a house and we pay the mortgage, which is something that maybe we can't afford to do. So that's an interesting
Yeah.
aspect that I didn't really think about, which is just something that came up now. Okay, good. you want to give us any key takeaways before we end our very interesting discussion today?
Yeah, I, I really hand in hand with understanding that it's not personal also means that you can do sometimes, not always, but preparatory work to help fit yourself into one of those, aforementioned statistical groups so that the bank would be willing to give you a mortgage. And that really offers a lot of flexibility, right? So as long as you understand where the bank's truly coming from, again, on a very fundamental level, that grounded understanding actually goes a very long way in practically providing solutions, I would say.
Okay, and I want to just state your contact information for the people who are listening and don't have the video. So it's Nagar, sorry. Phone number is 058-404-2235. And your email is Natan, Natan, 1omega at gmail.com.
Absolutely.
Okay, great. Well, this was extremely interesting, very, very informative. These are definitely things that I did not know. So thank you very much for that.
Absolutely.
Thank you for joining us tonight, guys, and have a good night. Please stay safe and looking forward to seeing you in my next live. Have a good evening.
Good evening.